All right, moving on. It's that time of the year again, ITR filing season, and while filing your income tax return may feel like a chore, but then also your biggest chance to save money the smart way, from claiming deductions under ATC to making the most of your health insurance, home loans benefits, HR exemptions, and more. There are multiple ways to cut down your tax outgo, provided you know the rules and use them to your advantage. So in our special segment, we decode the must-know tax-saving strategies and the do's and don'ts of ITR filing. Very important because, these are the pressing questions that people have on how to, legally save every rupee you can. Because remember, it's not just how you earn, it's how much you save that really matters. So let's get started. I have with me Tarun Garg, partner Deloitte, for this very special segment today. Tarun, hi, good evening, and welcome to the show. And so from now on, the entire week, we'll be having Tarun on the show, who will be answering all our ITR filing related questions. And for our viewers, also, just in case you want to ask any question where you need Tarun's help, in order to file your ITR returns, you can send across your questions on our WhatsApp number and also on our email ID, where Tarun can join us live and talk to you and answer your queries. But having said that, 15 September, Tarun, we've seen so far the data on the filing is somewhere around 4.5 crores. It is expected to go up in a couple of days because we know that people, despite there being an extension in the deadline, still wait for the last minute, okay? And this time it's just not ITR filing, it's also advanced tax. So how critical it is and how cumbersome it is and how much of a more work from a taxpayer's point of view?
Thank you, Kavita, for having me on the show. See, you have raised a very important question. See, as first of all, on the tax filing, the return filing deadline for 24-25, originally it was 31st of July 25, which has been extended till 15th of September 25. I remember you calling me on one of the shows and wherein this was also raised. So I had kind of mentioned that, see, while these deadlines have been kind of keeping on extending, but then we sometimes as SSCs tend to become a little complacent and then keep the ITR filing to the last minute. But having said so, see, again, very important to first of all do whatever, say, reconciliations which are pending for your filing of income tax return for 24-25 is concerned. So just download all those documents pertaining to the return filing, and some of the critical ones are your Form 16, your tax deduction certificates, which are called as Form 16As, your 26 AS, your AIS and TIS. All those documents should be, first of all, handy. You need to have your salary slips, your final sort of an income tax computation statement if you are a salaried earners. Then reconcile with that, because what may sometimes happen is that maybe because if a person has opted for an old tax regime and might have forgotten to submit some of the proofs, then this is the last chance, the return filing, wherein you can try and claim those deductions while filing your income tax return. So again, very important to file your return on time, because other important aspect is if you're an old tax regime opter and then you missed this original filing deadline, then you will be kind of mandatorily gone away with that option, because this option to file under the old tax regime is only there once you have filed the return of income on time. So that is one. And Kavita, the other important aspect that you raised was in the context of your advanced taxes. Now, this is the second installment for advanced taxes for financial year 25-26. So by this time, an individual more or less knows what will be his overall provisional earnings, and whether he's an earning he is gonna get a good amount of earnings from say capital gains or your house property or say other interest income. So in the nutshell, if your overall balance tax liability after deducting TDS, TCS on incomes is more than 10,000, then as a mandate, you need to prepare your advanced tax calculations and pay on time. Failing which, there is a interest under 234C, which can get attracted. And say at the time of return filing, say in the next year, people will get pinched by this amount of interest. So again, both the two compliances are really important. But first, complete the tax filing, and then also go on to file your advance taxes, Kavita.
All right. Let's just focus on ITR 1, which is called Sept. Now, as per this ITR form, I really want to understand the difference in ITR filing, which an old tax regime taxpayer needs to follow and a new tax regime taxpayer.
Sure, Kavita. So, see, ITR 1, as you rightly raised, is a Sahaj form. And this is specifically devised for individuals who are drawing, say, salary income up to, say, 50 lakhs. So, if you are having a salary income in excess of 50 lakhs, then you cannot file your income tax return under ITR 1. You have to mandatorily go for ITR 2. And then if you are a non-resident, then also you cannot opt in ITR 1. There are certain other restrictions also to this form. Say if you are having a capital gain income which is in excess of 1,25,000, so then also you have to go in for your ITR 2. And say if you are having a capital gain from house properties or sale and purchase of same say fixed assets or your properties, land and building, then also you have to go in for ITR 2. So there are certain changes which were announced by budget 2024, the final one, and that's how there were good amount of changes that had happened in these ITR forms in terms of their reportings, and that has to be complied with. And Kavita, one important point that you have raised is in terms of filers for an old tax regime. Now there are certain additional reporting requirements under ITR 1 also. Say if you are having your HRA deduction. So for HRA also you have to declare which city you were there. Say was it a metro city, was it a non-metro city? What is the PAN of the landlord? And in which particular address of that property you were living. All those declarations have to be made. And if you have invested into say health insurance or life insurance, that then policy number needs to be mentioned. And if you have say taken a home loan on a property, then that home loan number needs to be mentioned. And which bank you took that loan from has to be also kind of properly disclosed, along with the fact that when was that loan sort of sanctioned to you. So these are certain additional requirements which the taxpayers were not finding in the previous fiscal years or tax years, and then hence it is important to kind of file those returns correctly. And if you do not file returns correctly, then as an old tax regime, you may land into trouble because lots of scrutinies, lots of queries are being sent by the authorities, especially for the people who are opting for old tax regime, Kavita.
Exactly, exactly. So, how important it is for you to actually, check your ITR with your AIS, because that is something which is, if there's a mismatch over there, there'll again be a query, and that will again lead to a deeper scrutiny.
No, again, very important, Kavita. See, uh, as I mentioned, that the concept of AIS, TIS, this has been introduced from last few fiscal years. Previously, Form 26AS was the one form that people kind of used to follow. But the idea behind AIS, TIS was that, say, if there are certain sale of capital gain or earning of capital gain, sale of mutual funds, if you have invested into property and those properties have been sold. So all these transactions were typically not getting captured in Form 26AS, and that's how these AIS, TIS via annual information returns were sort of introduced in the overall tax system. And that's how these are now becoming one of the base documents when you are filing your income tax return. So it is a mandate, I would say, that you should refer to your Form 26AS, your AIS, TIS, and check if there are any sort of inconsistencies that you find are coming into your filings before kind of proceeding to upload and file your income tax return. Say any sort of a mismatch in AIS, TIS versus the income that you are declaring in your return may land into say scrutiny. The original scrutiny or intimation can come under 143(1), and then if you do not reply or comply with that, then it may sort of land you into a trouble. I would say a deeper scrutiny under 143(3) and 143(2). So all those sections have to be considered, and if there are any mismatch or any visible sort of inconsistency that the taxpayer finds, then just check your balances, check your bank statements, and basis that, if you're sure that these are incorrect entries that somebody has reported, then there is an option to go to the online portal, file a complaint or a grievance against that reporting which has happened, and then say that this income doesn't belong to me and my correct income is this. And then certainly the authorities do take a cognizance and that correction will happen. So, all in all, Kavita, very important, relevant point. Do check your AIS, TIS, and so that there are no inconsistencies. And given this is just a 1 week away deadline, so be sure on what's there in your AIS TIS before you proceed to file the income tax return.
Exactly, it's just 1 week away deadline, and we'll be having this particular segment every day till 15 September. So, for all of viewers who want any help from Tarun or from the Money Show, you can send across your tax related queries on our WhatsApp number and email ID. Thank you so much, Tarun, for taking your time out today. And tomorrow, let's connect again with more topics and a more explanation as far as ITR filing is concerned for our viewers.